The EU, especially, has not been happy with Russia's war on Ukraine, so they've imposed numerous sanctions in a bid to cripple its economy. But how has that turned out for Russia exactly? Russia is a blessed country, to say the least, from its vast landscapes to its rich history and culture to its abundant resources, you name it. So it isn't very surprising for Russia to continue on its upward momentum even in the face of the numerous allegations and charges leveled against it by the international community and from within. This European giant is shockingly building an industrial revolution of its own even in the face of all this. But what factors are bound to make this possible, and what does this mean for Russia's economy? Join us as we explain how Russia has been able to climb back up to the near top once again. Everybody expected the war and sanctions on Russia to take a heavy toll on the country and the Kremlin. In fact, some had even predicted their fate in that direction. 2 years later, Russia is still the Russia it has always been, almost like they hadn't been hit with anything. But that's not all there is to it. Russia has been at war with Ukraine since 2014, until its full invasion in February of 2022. That was only when the intensified conflicts and unending sanctions started. As expected, the war had brought Russia numerous consequences, especially for its economy and defense system. In addition to the loss of lives and properties on both sides, destruction of infrastructures in Russia, its terror and war crimes against Ukraine, the sanctions by Western powers have brought about a notice in Russia's smooth-running government. Since the war began, Russia, who has mostly been the aggressor, has expectedly lost a good number of weapons in their fight. It, in turn, has to devote a sizable share of its economy to the defense system. It is also looking to boost its military capabilities and production to make up for the losses encountered with Ukraine. The sanctions from the West have also contributed to Russia's military lack, because they not only come after Russia's GDP, but its defense sector as well. It has been largely effective, although it may be hard to determine the overall effects, given the numerous sanctions and the concurrent effects of the war. Russia has also decided to keep data on their economy guarded, making it harder to pinpoint the effects of the sanctions on it. The fact that Russia launched a war against its neighbor, Ukraine, but it didn't go exactly as planned, has also not done its big name any good. This is mostly because the war has stretched out since then, and it hasn't achieved total victory. As one of the world's top powers, this isn't a good look per se, and Europe was also unhappy with Russia's choices, so they slammed multiple sanctions on the country, the highest a major power has ever gotten in a century. Being hit with all of this, the world expected Russia's economy to shrink by at least 15%, but it only experienced a 2.1% decrease. It is said that Russia's GDP growth rate would soon overpower that of the United Kingdom and Germany at the pace at which it is going. Its inflation rate did increase, which is quite normal for a country burdened with all of this. On the other hand, its currency, the Russian ruble, has been on a steady run since the invasion, though it did take a hit at the beginning. The unemployment rate of Russia as well is at an all-time low, and it's almost like nothing ever really happened. What has Russia done to ensure the smooth running of its economy in the face of all this, and how has it managed to continue standing tall? Several factors have helped Russia lower the effects of the war and sanctions, and one of them is its abundant natural resources. First, sanctions have mainly not affected the export of fossil fuels, which is the main source of income for Russian businesses and the Russian government. Russia's oil and gas revenues actually increased significantly in 2022, despite a decline in production. Official data from the nation indicates that from January to October, they amounted to 9,788 billion rubles, approximately $132 billion, or 44% of total revenues, a 34% increase over the same period in 2021. Oil shipments in 2022 exceeded those in 2021, and Russia diverted them to China, India, and other nations in preparation for the July 22 sanctions that would go into effect in January 2023. Since Europe imposed extensive sanctions on Russia and refused to purchase its abundant natural resources, Russia turned to China, India, and other Asian countries. In 2022, Russia also experienced its largest inflow of revenue and its largest trade surplus since its formation from the ashes of the Communist Soviet Union. Though Russia's trade surplus has been up back as far as 1998 due to its high exports of commodities, Western powers tried their best to isolate the Russian economy. However, Russia's decline in imports and its rise in gas and oil exports didn't help matters. This made Russia's current account surplus hit a record high in 2022. Russia's current account is a measure of all the money that flows into Russia from trades, investment, and others compared to the money that flows back out. In 2022, it was at $227 billion, an 86% increase from 2021. Second, in response to the recession, the Russian government provided assistance to businesses and industries that were impacted particularly hard. This helped cushion the consequences of Russia's war on Ukraine and support productivity for the nation, whatever the case may be. The state of Russia's industry sector has been developed due to its implementation of beneficial economic reforms. Since the West has focused on crippling certain parts of its economy, it is only normal for Russia to want to diversify and spread out from those sanctioned aspects of its economy. For example, the Russian government has not held back in working towards policies that will help to modernize and diversify its economy, especially in the industry sector. Some of these reforms include tax reliefs for businesses, investment incentives, and strategies to draw in foreign investments. These reforms have brought about an increase in foreign direct involvement in Russia, specifically in crucial industries like technology and manufacturing. At first, it had fallen greatly in 2022, from $38 billion in 2021 to $18 billion in 2022. Following Russia's invasion of Ukraine, Western companies decided to cease or limit their business activities in Russia. But now you can't say the same about that, since there has been a bit of an increase since then. It's almost like while the Western governments are pushing for these restrictions, some of their Western companies have refused to be influenced by it. Thirdly, Russia has discovered strategies for evading, lessening, and getting around sanctions and other limitations. For instance, it has depended on gray imports of sanctioned high technology through Turkey or Central Asian nations, despite the fact that these imports are more expensive and arrive more slowly. Additionally, it has said that Russia has secretly bypassed sanctions illegally within the EU. In the bigger picture, international cooperation on sanctions has nevertheless mostly stayed steady. Another factor is its technological progress. Russia's industrial growth is also fueled by the rapid advancements in technology. In order to improve productivity and streamline production procedures, Russian businesses are embracing automation, robotics, and artificial intelligence. In addition to increasing productivity, Russia's adoption of cutting-edge technologies is establishing it as a global leader in innovation. Russian industries are using technology to stay ahead of the curve and satisfy the demands of the contemporary market, from aerospace to automotive. Vladimir Putin's 2018 decree created a military Silicon Valley called ERA Technopolis, which the Russian Ministry of Defense launched to improve science and technology, military research and development, and other related areas. Artificial intelligence, nanotechnology, bioengineering, robotics, information security, and energy sufficiency are among its priority fields. Russia has made a great deal of notable advancements in autonomous systems, AI, and hypersonic technology in recent years. Russia's industrial sector would be incomplete without addressing its enormous natural resource reserves. Russia is rich in raw materials, from minerals and metals to oil and gas, which form the basis of its industrial development. Due to its status as a major supplier, Russia is well positioned to take advantage of the growing global demand for resources and promote further growth within its industry sector. In 2022, Russia boosted its oil output and swiftly redirected its seaborne crude shipments to Turkey, China, India, and Pakistan. That being said, Russian oil companies are now able to obtain much lower prices than they did previously. Russia's Ministry of Finance estimates that its gas and oil revenues will total 8.9 trillion rubles, approximately $127 billion, this year. The total revenue from oil and gas for the entire year was 11.6 trillion rubles, approximately $167 billion. a 24% decrease. Despite all the shortfalls, relatively low oil prices, and a growing deficit, Russia will likely avoid a deepening crisis. That will be prevented by spending the resources of the National Wealth Fund, selling foreign currency on the market, and raising taxes on companies in the natural resources industry. The NWF is in decline, but currently stands at $148 billion, its liquid assets being less than the quoted amount. It is vital to remember that the Russian budget is bolstered by earnings from other export commodities, such as industrial metals, which are too valuable for the Western markets to prohibit. These commodities are mostly unaffected by sanctions. Between March and June of 2022, Russia's shipments of nickel and aluminum to the US and the EU rose by as much as 70%. The largest industrial metals market in the world, the London Metal Exchange, LME, debated and ultimately opted against prohibiting Russian aluminum from being traded or stored on its platform last year. The increasing need for lithium and nickel, both of which Russia is a significant producer of, is a natural consequence of the growth in the market for electric cars and renewable energy, which in turn is driving up the demand for batteries. Palladium, which is required by the global automobile sector, is mostly supplied by Russia to the United States, accounting for 40% of Germany's nickel demands. Polymetal, a Russian manufacturer of gold and silver, is doing well. The business is expanding and bringing in billions of dollars a year. Rosatom, Russia's nuclear power monopoly, is prospering. Currently, it is operating in 23 locations across 12 nations, including China, Belarus, Hungary, Egypt, and Turkey. Rosatom's international order book is currently above $200 billion, and its export sales climbed by 15% to $10 billion last year. None of those industries were affected by the sanctions. The robust and autonomous Bank of Russia, Sberbank, is a factor contributing to Russia's relative resilience in the face of the war and sanctions. It has been imposing significant interest rate hikes since 2022 in an effort to contain inflation, which is still at 7%. Combining this with regulations enforced by the government, it is nearly impossible for Russian exporters and the numerous international businesses that are still present in Russia to withdraw funds from the nation. Together, these measures have prevented the ruble from collapsing completely by preventing the money from leaving Russia. Russian businesses have also mastered the art of evading sanctions. The oil cap is a perfect example. Theoretically, Russia's finances would be severely impacted if no oil was traded with the West above the cap. Russia spends a large chunk of its budget on the war and has contributed immensely to its GDP. So in some way, Russia's war with Ukraine is now the main driver of Russia's economic growth. Will this be sustainable for Russia in the long run or not? We'll find out soon enough.